Hello, everybody, and welcome to the Green Candle Network. As always, we like to start with that this is not financial advice. You need to do your own research. Please see the disclaimer in the channel description. We're trying to build here a serious degen community platform for like minded individuals who enjoy following the markets and rolling the dice. We welcome all comments. I do read them below, good, bad, or just funny. As you know, dad jokes are always welcome. Well, let's get started. Today is Friday, June 6, 2025. The markets have closed. And today we're going to be analyzing Oracle heading into the earnings. They're the first big announcement coming out next week. But first, obviously, let's take an overall look at the market. We pulled up the QQQ. Let's take a look at the QQQ. It's obviously had a nice run from the April lows, following a nice trend line. Everything looks really pretty. Might be getting ahead of itself a little bit. RSI has been sitting at the 70 range, moving up slowly through the past few months. Just based on RI, this is where we would draw support right at the 150-day moving average. Those of you that follow us know that we follow the 150-day moving average. We're from the Carter Worth School of Business. A lot of people like the 200-day. We feel the 200-day just never gets met. 150-day gets met consistently, and it's a better metric in terms of measuring. So we see that a floor for the QQQ at 503. The ceiling, we have it somewhere around here, around 540 range. So it's forming a nice ascending triangle. However, that's not what we think is going to happen this summer with the RSI so hot. We think we're probably just going to trend sideways and kind of do the same thing we did over the holiday break and the beginning of the year. Maybe just move sideways in the summer and kind of consolidate for the next wave. Whether that be higher or lower, we'll have to see at that point. A lot of things going on with Trump, Elon, rates, and tariffs. So, there's a lot of indecision out there in the market, and we feel that's going to be food for just going sideways going forward. Okay, so let's get into our big play for the week, which will be Oracle. Obviously on a fundamental side, they're going to release earnings on Wednesday after the close. Analysts are expecting 15.5 billion in revenue. That's an 8.8 increase over the same quarter last year. Earnings per share is supposed to come in at $1.64. That's a little under 1% year over year growth. Key factors for Oracle, obviously cloud infrastructure is booming. And then the AI initiatives that they have taken on and the collaborations that they've done with SoftBank and OpenAI to develop data centers nationwide. They put $500 billion. It's obviously something that the market's taking seriously. And as you can see, it's priced in. In our opinion, it's already priced in heading into earnings. I mean, we've had a tremendous move, and we'll get into the chart in a second. Earnings, it's confirmed on June 11th. The PE sitting at 40. A lot of people think it's expensive. That's not expensive for a tech stock. That's why Oracle's been moving. Has a nice dividend. Some articles in the news. Obviously, everybody's kind of bullish with the AI prospects. Smart money is betting big on the Oracle options. They just had a price target move to 190 from 165. So, we kind of feel all that is great, but in our opinion and what we're seeing and what our eye is seeing, we feel it's kind of priced in. It's kind of followed, Oracle's kind of followed the QQQ if you look at it. We've had this nice run up following that trend line. Beautiful recovery from the market low in April. But again, our eye catches a little bit of a red flag over here, which is that move in the RSI. We're getting near 80. As you know, no matter what, even in the best of earnings reports, it's hard to get over that 80 RSI mark. Typically leads to a consolidation. You blow through the Bollinger Bands and you kind of consolidate. Very normal, very historic pattern for charts. Nothing out of the ordinary. And then you will either consolidate in and move sideways or move down to the middle of your Bollinger Band. So again, we think that's very normal. How do we see the chart going into earnings? We kind of see a little bit of support right around here, maybe. Right around there. It looks like it's obviously heading higher, but we do feel that it might have a little more room to run. I mean, we're sitting at the top of the band. Maybe we can extend out to 180 on a good earnings call or on a good push right before earnings. So if you see a move up this week to the 180 range, obviously you want to be backing that away and you want to fade that because we just feel it won't hold it based on the high RSI, the Bollinger Bands, and just basically the resistance that was met back in March or February in the 180 range. That said, again, we think the market's going to consolidate. So, in our opinion, since we are past the Bollinger Bands, maybe we get a little move up on Monday. That's when you want to jump in. And I think at that point, you want to come in and get some puts heading into earnings. And we would probably want something in this range here, which means anywhere from 175 to 165, 175 to 165. Okay, so what is the market pricing in? Market is pricing in for June. Very expensive options right now, obviously because of earnings. What is it predicting? It's sitting at 174. So if you go to the 175 call and put, you're looking at 6.5 plus 7.5. So they're expecting a 14-point move on the stock. 14-point move puts it at 190 or 160. That's a big gap. We'd probably want to play something short term in the middle to make money. But again, we're not day traders here. We are degens, but we want to make money. We're not looking to gamble and roll the dice on what happens with traders on one day or if there's a tariff announcement. So typically what we like to do is go give ourselves one earnings report out. So if we're reporting in June, the next report is going to be in September. So we'll want to look at an October put spread. And the volatility is not expensive, so you're not overpaying. So that's good news. So let's close this up. And let's take a look at the October puts. We're looking at, what did we say, the 175 by 165 range. So if we were to say, let's say a 170, we buy the 170, we sell the 165, creating a vertical put spread for October. We would be coming out of pocket for 10 contracts, $2,000 with the hopes of making the 5 points, which is 5,000. That would be 3,000 over the investment of 2,000. That's a nice return anywhere you cut that for 4 months worth of work for your money. So that would be our play. Our play would be to do a put vertical, price it out, give yourself an extra earnings report because we do feel the numbers are going to be strong. We do feel that it's going to beat on all metrics. It might raise guidance, might even create a small pop in the stock. However, Bollinger Bands are extended. RSI is extended. You may even want to wait till after earnings to put this put spread on. We would put it on now because we feel pretty confident that we're going to go sideways. We're really not going to pop more. Maybe we have a day of pop, but we'll be back. It'll come back in. And with that said, full disclosure, we do not have a position in Oracle. We do not plan to take one. If there's any tickers you'd like for us to analyze, please leave it below in the comments. We will take the most mentioned tickers and try to do some work on them. Let us know what you think of the trade. Thumbs up, thumbs down, or any alternative ideas. Again, we're trying to build a community of degens and all are welcome here. Hope you liked the video. Hope you come back. Please be sure to like, subscribe, and turn on notifications. Enjoy the rest of your weekend, fellas.